She started consulting and invoiced her first client $8,000. No LLC, no EIN, no business account. 18 months later, a contract dispute escalates into a lawsuit. Because she operated as a sole proprietor with no formal entity, the plaintiff's attorney names her personally, not a business. They can go after her personal bank account, her car, her home equity. An LLC, filed properly before that first invoice, would have cost $50 to $500 depending on her state. She spent $14,000 in legal fees defending a case that the LLC would have contained at the business level. The default business structure, the one you automatically operate as if you do nothing, is a sole proprietorship. There is no filing, no registration, and no protection. All business debts, liabilities, and lawsuits are your personal debts, liabilities, and lawsuits. Your personal credit, bank accounts, and assets are all exposed. For a business with no risk, no clients, and no revenue, a sole proprietorship is a temporary starting point. For any business that bills clients, holds contracts, handles money, or could be sued for any reason, operating as a sole proprietor is a liability you've chosen to carry. The Limited Liability Company, LLC, is the correct first entity for most self-employed people and small business owners. It provides the liability protection of a corporation with the tax simplicity of a sole proprietorship or partnership. By default, a single-member LLC is taxed as a disregarded entity. Your income and expenses flow through to Schedule C, exactly like a sole proprietorship, but the personal liability shield exists. Filing an LLC typically costs $50 in Kentucky to $500 in Massachusetts, with an annual report fee in most states ranging from $0 to $300. These are deductible business formation expenses. After forming your LLC, the next step is an Employer Identification Number, EIN, from the IRS. An EIN is a 9-digit federal tax identifier for your business, analogous to a Social Security number for an individual. You need an EIN to open a business bank account, apply for business credit, hire employees, and in some states, to register for sales tax. The EIN application is free at irs.gov and takes 5 minutes online. If anyone charges you for an EIN, and many companies do, you're paying for something the IRS provides at no cost. The application is at irs.gov/IN. A business bank account is not optional. It is the operational minimum for financial separation. The moment you mix personal and business funds, you've begun the process of piercing the corporate veil, the legal concept under which courts can hold an LLC owner personally liable despite the entity structure. To maintain the liability protection your LLC provides, you must keep finances genuinely separate. Business income goes into the business account. Business expenses are paid from the business account. Owner draws are explicit transfers from business to personal. This discipline is what makes the LLC protection real. State registration requirements extend beyond the LLC filing in many states. Depending on your business type and state, you may need a business license at the city or county level, a DBA, doing business as, registration if operating under a trade name that differs from your legal entity name, a sales tax permit if you sell taxable goods or services, and a zoning clearance if you operate from a home office in a regulated zone. The SBA's Business License and Permit tool at sba.gov identifies the specific requirements by state, county, and business type. Run through this before your first transaction. The operating agreement is the internal document that governs how your LLC operates, and most single-member LLC owners never create one. This is a mistake. Banks, investors, and commercial landlords sometimes require an operating agreement before doing business with you. More importantly, it documents your business's rules for profit distribution, management, and dissolution, which matters if you ever add a member, face a lawsuit, or need to demonstrate that your business has genuine operational structure. A basic single-member LLC operating agreement is available as a template from every state bar association and takes 1 hour to complete. Registered agent is a requirement in every state for formal business entities. A registered agent is the person or company designated to receive legal documents and official government correspondence on behalf of your business. You can serve as your own registered agent in most states, but this requires you to list a physical address, not a P.O. box, that is available during business hours. If you work from home and don't want your home address in public business registration records, a commercial registered agent service costs $50 to $150 per year and provides an address for this purpose. Intellectual property registration is frequently overlooked in the first year. If your business name, logo, or core product is a meaningful differentiator, filing a federal trademark application protects it nationally. Trademark registration through the USPTO costs $250 to $350 per class of goods or services for an online TEAS Plus filing. Unregistered marks have limited common law protection, typically only in your geographic area of actual use. A competitor in another state can build a brand around your name, and without federal registration, your legal options are constrained. Filing a trademark is one of the highest ROI legal actions a small business can take in its first year. The legal foundation is not glamorous work, but every day you operate without it is a day you carry personal liability for your business's actions. Form the LLC. Get the EIN. Open the business account. Register your trade name. Draft a basic operating agreement. Trademark your brand. Most of this can be completed in a single afternoon for under $500. Part 2 of this series covers the tax setup that nobody does on day 1. The decisions that determine how much of your first-year revenue you actually keep. The legal shell protects your assets. It does not protect your profit. Starting a Business Part 2 covers the tax setup. Nobody does on day 1, the S-Corp deadline, and the quarterly mistakes that turn a strong first year into a 5-figure April surprise. It is on this channel.